Hello, welcome to the first episode of Daily Market Mastery with me, Christian Rauchenwald. Today, in this first episode, things might still be a little bit rough, but yeah, like the idea behind those live streams is to give you a better insight into my portfolio on eToro, where I am a so-called popular investor, meaning that other people are able to, I'm going to share my screen real quick, copy my portfolio, which has since inception performed relatively well with like almost 30% returns in 2020, 35 almost in 2021, 45 in 2022, and 2023 so far we are a bit off to a bad start. But if you look at my past history, you see that like some negative months are not the exception. It's just part of the journey. Anyway, part of this live streams or part of that live stream or those live streams is to basically provide you with a little bit of insight into how I'm picking my investments, how I'm trying to predict the long-term price movements in the future, to basically position my portfolio to, even like last year when markets were really bearish, basically still deliver decent returns for me and for my copiers. Now, I obviously have to point out that everything that I share in this live stream slash video, if you watch it later, is my personal opinion and in no way financial advice or of any kind. You should obviously always do your own research, consult certified professionals, draw your own conclusions, and make your own decisions. In other words, don't just do something with your money because you heard me say I like this stock or I like that stock or I think markets will move like that. Always do your own research as well. Yeah. So what else is there to say before we get started with this first episode? It's yeah. So it's the first stream. I have a new streaming setup that I just recently finished, which means some things are not yet fully configured, which means there, yeah, like might be some issues in terms of like how I present or show information that we'll still work on. As you notice, I mean, while I have my webcam configured and the screen sharing configured, there is, for example, right now, there are no overlays, or I mean, there should be some alerts. Actually, you quickly have to check something. 1 second, studio mode and alert boxes. Yep, that one is active. The other one should be disabled for now. And back to chat room and studio mode disabled. Yeah. And so there should be alerts when people follow, subscribe, whatever it's called on YouTube. Since I'm also streaming on other platforms, you might know I also have another YouTube channel that focuses mostly on passive income and crypto opportunities. It's called, if you search for my name, so I'm going to share it real quick. If you search for my name, Christian Rauchmal, you can find that channel. And yeah, besides that, I also do have a Twitch channel where I'm streaming gaming. So like basically at the end of the day to relax a little bit. So yeah, and that's why my streaming setup is like a little bit of a mess right now, because I basically have to account for multiple different streams and set everything up in an efficient way. And because the setup is new, yeah, that's still all work in progress. Now, I hope you all have a great start into the new week. I know there are a lot of news going around and so on. And if you're now wondering if I'm like, you know, like a full-time trader, so I have to disappoint you. I'm just somebody that likes finances a lot and likes, yeah, like anything related to finances a lot. And that's why I love to manage my own portfolio and have been doing so successfully for quite some time. Hi, Mark. Yeah, like for CF PowerScript, which is our software business that my wife and I have, I cannot help you out here on the stream. Like, this is solely our trading channel. If you have an issue, you can just ask in our Discord community that we have specifically set up for CF PowerScripts, or email support@cfpowerscripts.com. And then, yeah, like we'll take care of it. But yeah, like not going to go into, wouldn't make much sense to have dedicated channels for different business ventures when I then start mixing things up. So yeah, so, and donations definitely wouldn't help. I'm not doing this here for donations. So this channel is, by the way, right now not monetized at all. So yeah, but yeah, anyway, yeah, I'm also going to quickly share that we are live on eToro. So just to give people a chance to jump in, just have to find the link somewhere, content, live, and post, get shareable link and copy. And there we go. Yeah, Merck, I really would love to help you, but it's simply not the right place to do that. So Yeah, same thing. If you have problem joining Discord, then just send an email to support@cfpowerscripts.com. Uh, Join me live. There we go. So that's done. And yeah, so where do we start? Basically, if you've checked out my eToro profile, maybe you're already copying my profile, then you are aware that I'm basically using something called Elliott Wave Principle or Elliott Wave Theory, which currently gets automatically blurred by the NVIDIA thing that blurs the background, as the basis of my trading strategy. And I've mostly used that not for all trades that I did on that portfolio in the past, but I try to use solely that or rely mostly on that part of like trading strategy. It's basically I already have it open, trading view. You can find links, by the way, to the free book. So like the physical copy obviously costs something, but if you are curious, you can always read the book for free online. There's a link in the video description down below. And other than that, there is also a link to Elliott Wave International somewhere down below, which is basically where the book is available for free if you want to give it a read. Now, yeah, so to quickly summarize, let's pick the SPX. And right now we're on trading view. And let's see, they changed the layer. Okay, there. So I'm just going to get rid of everything. So to quickly summarize, no, I don't need text forms, leave me be. Okay, and how can I close that now? So to quickly summarize Elliott Wave Theory, the idea behind it is basically, or was created by somebody named Ralph Ellison Elliott in like 1920, 1930, or yeah, like roughly that time frame, that looked at a lot of data from indices and individual stocks and recognized some recurring patterns. So the whole principle is based on there are recurring patterns in the market that basically are split up into motive waves, so or like movements in the overall market direction, which in this case would be, for example, up, and then corrective waves, which would be waves or movements that go against the trend, like here down or here and so on. And the whole principle is based on the idea that a wave that goes up, or a motive wave or impulse wave, always splits up into 5 subwaves. I mean, those are now not correct. I'm just pointing it out. So I'm just putting something there to give you an idea, which would be, for example, like this, 1, 2, 3, 4, 5, and then followed by a corrective wave that always or subdivides in 3 or potentially multiples of 3s if we break it down. That would then be labeled, for example, yeah, now I have to disable the magnet because here we cannot do it. So like, for example, A, B, C, which then in the overall movement, since we have 5 waves that create a net advantage in one direction, and then 3 waves that kind of like create a retraction, always means that we are moving in that overall direction. Now, while I've drawn it like this, 1, 2, 3, 4, 5, and it goes upwards, and again, that those waves are completely wrong here. It's just like to give you an idea that it's 1, 2, 3, 4, 5, and then ABC or a variation of ABC. It's basically, it could also be the exactly other way around. So I'm not sure if we pick, for example, ape is probably a bad example. Let's pick, okay, there are no drawings on that chart. So like, for example, if we were to start from here, and again, I'm not gonna pay attention to actually draw accurate waves right now. It's really just to drive a point home. So it could also be 1, 2, then let's say 3, 4, 5. And in this case, then the ABC, so the corrective pattern would actually be a net upwards movement, yeah? But it would still, again, those waves are not correct, but to drive the idea home, how it works, it would still mean we have like the general movement, and then we have a counter movement. And because of how those are structured, we have then a net gain in the direction of the overall market, whatever you want to call it, yeah? Yeah, thank you, Rina, for sharing that. Yeah, you can also, I'm not sure if you're available or able to share the email address, but yeah, I'm just gonna type it. So just to be safe, yeah. So, and yeah, so that's the whole idea behind it. It obviously sounds super simple, and the first thought is then you go, well, if it's so simple, 1, 2, 3, 4, 5, ABC, then everybody would use it and it would be super accurate. However, I'm quickly gonna share a second cam that's not fully configured yet, but And yeah, so that's the Elliott Wave cheat sheet that you guys can also find down below. I'm going to try to hold it a little closer. I have to set up the zoom still. So basically, those are all the possible patterns, that are supported by Elliott Wave Theory. And with it, a lot of additional information. I'm using that a lot because it's faster than flipping through the book and trying to figure out what the exact rules or guidelines are right now. But so the challenge of Elliott Wave Theory, so jumping back to the screen. So the challenge of Elliott Wave Theory, and let's get rid of that and jump back to SPX is, didn't we? Okay, there we do. And get rid of that as well and jump back. We're still a monthly, okay? So the challenge of Elliott Wave Theory is that at any given moment, so if we say, for example, this would be a starting point where we now start an ABC corrective pattern, at any given moment, it's possible that multiple forecasts apply. So it's possible that this forecast would be valid. Again, that's just me putting random points there. And it's also possible, however, that if we again zoom out again, and if we would assume that whatever, here's our starting point, and let's now pick it a little bit more random. So 1, 2, 3, 4, and it would be possible that 0.5 might be, for example, I mean, completely ridiculous, but yeah, I cannot scroll. Do we have a draw thing here? No, we don't. Yeah, that 0.5 basically still hasn't happened yet, and that we have more upwards movement. So, which obviously seems now super bad in terms of, okay, what, like it could go down or it could go up. That's not really much of a help. So I'm just saying it's possible that based on the rules and guidelines, 2 or more forecasts are still at the moment valid. Yeah. Now, if you are in a lucky situation, all or most of those forecasts will point in the same direction, and then one would tell you, okay, the price will go to here. The next one would tell you, okay, it will go to here, and the other one will tell you it go to here. So it wouldn't really matter because every forecast tells you, okay, we are going down now if you did your job right. Yeah. And then there's a situation where we'll have one forecast that will tell you it will go down here, and one forecast that will tell you it can still go up first, or it will go up more. And so there are situations where you simply then might need additional information to make your decision. Overall, I try to focus on like what's or I try to find situations where everything I can come up with points in the same direction, or at least most things point in the same direction, so that in the end then I'm fairly confident with my assessment. I'm obviously not always right, and I haven't mastered Elliott Wave Theory yet because of the insane flexibility that it offers. But so far my track record shows that I'm right often enough, or at least in the past was right often enough, and I try to replicate that. Yeah. Now, again, so to drive the point about Elliott Wave Theory home real quick is, if we actually switch back real quick to the desk cam and to the cheat sheet. So again, it might be hard to see the exact pattern, but basically there are 3 impulse pattern or impulsive patterns, which are again in the overall market direction, which might be up or down. Where on the other hand, we can see that there are a total of 8, so 6 corrective patterns and 2 triangle patterns, which are basically then combinations of other corrective patterns. Which means if we, think about that for a second, it means that the waves that go like so wave 1, wave 3, and wave 5 are relatively easy to map out and identify because there are only 3 possible variations for those. Yeah. Whereas wave 2 and wave 3, so the corrective waves, which again, it could be completely the other way around. It could be a chart that goes from top down. But the same thing would apply. Wave 1, wave 2, and wave 1, wave 3, and wave 5 would be relatively easy to map out and identify, whereas wave 2 and wave 4, so the corrective patterns, are much harder to identify because there are just so many variations that are possible. Yeah, so you might think, okay, whatever, like wave 3 ends here, and this here is then wave 4, and here we go up again to wave 5. Just to then be surprised that actually it turned out to be a different corrective pattern that only ended here, where we're then talking about, in this case, 7 years difference. Yeah, so you have it goes up first, and you already expect it to just correct a little bit. So 1, 2, 3, and then you suddenly have a drop below what you had here, simply because you were wrong with labeling this part. So it's much easier to identify the main movements, the impulsive movements, than it is to identify the corrective movements. Yeah. And yeah, like what other thing is there like to cover the basics before we actually look into like some investments that I currently have and like why I have them and actually dig deeper or actually start from zero to label them out. Yeah, so corrective patterns are always much harder to identify. So sometimes, or let's cover the switching back. So I actually forgot to share the screen. Sorry for that. So I was referring to this area here earlier. So when I said like you might have here wave 3 and expect then now that it corrects to wave 4, and you might think then, okay, now we go up wave 5, just to be surprised that you did it wrong, because a corrective pattern again can be so much more complicated. And then suddenly you discover that here, yeah. And that would then be okay here. I mean, if you enter here in 2022 till 28, you would be happy. And then suddenly, yeah, you would be very, very unhappy, at least for some time. Yeah, so how or why does Elliott Wave Theory supposedly work? The idea behind it is mass psychology. So those patterns are repeating itself simply because, yeah, like it's how most humans behave. And actually, 1 second, I'm just checking. Okay, no, everything's working. So the stream preview is like a lot behind here on my end, yeah. And so like how a lot of things or how the majority of people behaves, yeah. And that also by definition means that Elliott Wave Theory will apply more accurately to an index like the Standard & Poor's 500 or the NASDAQ, because it's the accumulation of the trading of like hundreds or thousands of stock or 50 stocks, depending on the index and what's in there, which means it's the accumulation of data from like tens of thousands individual investors and traders actually making the decisions. Whereas if we pick an individual stock, it will not always be so easy to apply Elliott Wave Theory. So there will be situations where if we try to label an individual stock, we might not get a satisfactory result, which is also the reason why my portfolio mostly consists of basically investments in the index or in ETFs that basically trade the index inversed. Yeah. And yeah, so that's another important point to drive home. Now, as for learning Elliott Wave Theory, or even if you're just curious about if it's accurate or how accurate it can be or whatnot, gonna circle back for a second, really recommend, even if you don't buy the book, yeah, so again, it's blurring the stuff. So even if you don't get the actual physical book, read the online book for free. And there, even, I don't know, like instead of reading the entire book, there's a chapter that, because the book is already quite old, there is a chapter towards the end that covers the predictions that the author of the book made for the market crash in 87 or so, yeah. And there you can see like what they got wrong, why they got it wrong, how it required adjustments, why their original assessment, considering all the rules of Elliott Wave Theory, was apparently still the best possible prediction, and so on. And you will then see for yourself like that you might not always get it right due to the flexibility of Elliott Wave Theory. But yeah, overall, it turns out, at least for me personally, to be a highly reliable tool. And yeah, now as far as tools go, so as you can see, you can obviously use your free TradingView account, or you can use TradingView Premium account. There's also links in the description down below. And then just use the tools where you have like the basic wave functions, which is one option. Then there's also a service which might be interesting for beginners. It's called wavebasis.com, if I recall it correctly. They offer a free trial account. I don't have an active account there right now, so it's not, or let's check if I can show it to you. Might be that my account is already completely expired. Honestly, not sure. Dum, dum, dum. Great to see, Merck, that you're still there. I thought you just jumped in for the Sea of PowerScript question, yeah? Like, yeah. So, hi, Sven. Yeah, GameStop is still a big position in my portfolio as well, although those I hold at computer shares, so they're directly registered. Most of them still haven't gotten to transfer everything, yeah. Yeah, but as for Elliott Wave Theory, if you use wavebasis.com, it's like a nice tool, and I really think sometimes I'm torn if it's the better solution or not, but more often I actually tend to Motive Wave, which we're going to see in a second. However, there you have some auto features which I currently can't use because I'm not on a paid plan anymore. But you also have the basic waves with the difference. It highlights a potential starting spot for you, which is also one of the things we're going to highlight here right now. So if we look here at the history, there's also history prior to 1928. And technically we could start down here, but we would always use a low point to start, or a high point if the trajectory is downwards, yeah. And wave basis basically just highlights the potential starting point for you on the chart. So you see it's right now what we're looking at, that would be the potential starting point. But if we look at this here, then we see that this high would be the potential starting point, yeah. Now what's nice about wave basis is that if I, for example, yeah, like whatever, like just gonna do that like this. So we have 5 waves, is that it automatically forecasts the price area, the target area for where the next wave potentially will stop. Now, again, that labeling here is likely not correct. I'm just throwing something on the chart, but you can see that, and that target area is not influenced by those candles here. If I put 0.1, for example, so you see it moves with the 0.1 level. But if I label this out and would assume that this is a impulse wave 1, then it would tell me, okay, the correction will likely stop in the area down here. And I mean, it got a little further, but it would still already be a good trade. If I now mark this here as 0.2, it would tell me, okay, potentially there should be a setting, lock, unlock wave lines, but there should also be one lock, unlock, yeah, all smart tools. Okay, so if I say this is 0.1 and this is 0.2, wave basis automatically estimates or calculates based on the rules of Elliott Wave Theory, okay, the potential profit target, or where wave 3 is supposedly ending. Again, that would assume it that is indeed 0, so wave 1 and wave 2, which it most likely is not, because I just picked a random part of the chart here. That wave 3 will end here. So obviously we will not know that this is 0.2 unless we have like the starting movement of it. So we will very often not be able to enter directly here, but we might be able to enter already here. And then we know, okay, we should consider taking profit maybe in that area. In this case, we would have missed out on a lot of profit. But then on the other hand, so once we have then that end of wave 3, again, then wave basis tells us, depending on where we say wave 3 actually is, it tells us, okay, the corrective wave that's following is most likely, and again, lock, unlock, all smart tools, going down in that area. And it pretty much, so it says here 13,804, and the low of that candle is 13,791. So if you would have closed your position at the top of that area, or at least partially, you would have locked in the maximum profit of a short trade down here. And then, yeah, for wave 5, it would again, that labeling is most likely wrong. Yeah, so I'm just trying to show off the benefit of the feature here. So it's really one nice benefit. And you can, since even if you don't have a paid subscription, while you cannot use the auto labeling features and stuff like that anymore, you can still manually use it to kind of like get a second feedback, especially when you're not super practiced with the different ratios that come with each wave and so on. Yeah, but giving a nice idea of like where things might be going. And the same goes then, yeah, which brings us to another important part about Elliott Wave Theory, and that is actually going to move the camera real quick to the other side, since we are mostly dealing with upwards movements. And that is like, if we have a 1, 2, 3, 4, 5 impulse wave, that wave on itself is part of a bigger wave. So every time you have 1, 2, 3, 4, 5, it's actually part of a big wave of a higher degrees, is what it's called. So that would be, for example, if we wouldn't have anything prior to that on the chart, so if we ignore everything before the start of our wave, then that would, for example, also be, yeah, just have to put the point somewhere. Okay, here. That would then, for example, also be our wave 1. I'm just going to put the other point somewhere here, drag that onto it. So you see that the zeros down here stack. So we have our purple wave, which is basically of a lower degree, and which makes the entire 5 waves. And again, those waves are likely wrong. And then we have the orange one, which is a wave of 1 degree higher. So which basically then would tell us, okay, if that would be indeed a wave 1, then we could expect a correction down into the area that's right now highlighted in orange for our wave 2 target. Yeah, and then wave 2, too far, wave 2, and have to scale that as well. Wave 2 would then give us a wave 3 target, which probably, considering the scope of everything here, might be much higher. Yeah, and so on. So like each wave by itself consists of waves of smaller degree and also becomes part or is part of a wave of a higher degree. Yeah. So that sounds a little bit complicated. It's also one of the, in quotes, annoying parts, because that also means that if we want to accurately label, we're going to go back to TradingView for a second. If we want to accurately label what's, for example, most likely to happen in the Standard & Poor's 500 next, we first have to start on the biggest time frame where we are able to label something and work out the waves there, so we know what kind of wave we're currently in. So for example, if we were to, can I move that a little bit? It's a little bit annoying right now with the, yeah, anyway. So if we know that right now that would be the point wave 5, yeah, again, most of that is wrong here. So, but if we know that this would be point wave 5, it would also tell us that this entire thing is basically then wave 1 and that we are currently in wave 2 on the way down. And then we could use either look it up in the book, or we can use switching to the cam. And I'm also going to quickly change a setting for that camera that it doesn't always turn off. So and back here, desk cam, studio mode. So that's why the cheat sheet is also so handy, because, well, I'm going to try my best to hold it close enough. But if we look for those impulsive patterns, then here it basically tells you how the waves are broken down. So if we have a 1, 2, 3, 4, 5, it tells us here that the first wave has to consist of another impulse wave or a leading diagonal. So it has to contain another pattern like this or a pattern like this to be valid. Yeah. And if we're in wave 2, we know that it can be any corrective pattern. So it says here any C, not triangle. So it can be any of those 6 corrective patterns that we have here, but not one of the 2 triangle combinations that we have down here. And we also have the percentages how likely each of those patterns is going to be in a location. So it tells us for wave 2, there is a 42% chance that the corrective pattern is actually a zigzag, which is this pattern here, an 8% chance that it's a double zigzag, which is right below, 1% chance that it's a triple zigzag, and a 40% chance that it's flat corrective pattern, and last but not least, a 10% chance that it's a double free in that case. Yeah, let's say 10% double free. Yeah, so this one here. So, and yeah, like just like we can break down, if we have here wave 1, which we break down into 1, 2, 3, 4, 5, we can also then again break down this wave 1 here into 1, 2, 3, 4, 5. This corrective pattern here, again, it's just randomly labeled. Oh, sorry, screen share. Yeah. So just like we have the wave 1 here, and that breaks down into 1, 2, 3, 4, 5. Again, the labeling is right now random. It's just to drive home the point. That 1, 2, 3, 4, 5, if we look at it, that wave 1 here also again has to subdivide into 1, 2, 3, 4, 5. And that wave 2 here has to subdivide in a corrective pattern. So ABC, or a double free correction, or a double zigzag, and so on. And then that wave 3 here also always has to be an impulse wave. So it would have to subdivide again into 1, 2, 3, 4, 5, following the rules. And then here we would have another corrective pattern and another impulse wave or ending diagonal. So again, 1, 2, 3, 4, 5. And then if we look into, for example, wave 2, which again, I'm just randomly putting points here, could be A, B, C. Yeah. Then for that A, B, C, we also again have guidelines how they have to subdivide. So if that would be a regular zigzag corrective pattern with A, B, C, then wave 1 would also again be either an impulse or a leading diagonal. So that wave down here would need to subdivide again into 1, 2, 3, 4, 5. And then that wave B here would need to subdivide into any corrective pattern. So it could contain another ABC pattern, which is then just smaller. And that wave C would then be again another 1, 2, 3, 4, 5. And that goes basically more or less until we reach a time frame. So I'm not sure if we have the minute time frame available here, where we then are simply not able to break things down anymore because they just become unreliable. Yeah? But that's the biggest challenge with Elliott Wave Theory, that you cannot just say, okay, I'm now going to jump on the 5-minute time frame and I'm just going to randomly label out, or let's do this in wave basis real quick, where right now we're looking at the DAX, but we can also SPX, let's see. Yeah, so SPX. And now we're on the daily chart. And how do I change the, yeah, there. So let's say we jump on the, no, that's not minute. Daily. Okay, daily is the smallest one I can jump to. Okay, I'm not allowed to jump daily. Not allowed. Okay, monthly is the smallest one I can jump to on the free plan. Yeah, but let's assume if that were a 5-minute chart, 15-minute chart or so. So I cannot just jump in and say, okay, I'm now going to label 1, yeah, whatever, 2, 3, 4, 2, 3, 4, 5. So yeah, I mean, it might turn out right. You see here, if I say this is wave 1, the area predicted is roughly where the price bounced a little bit, and we would have made a nice profit already selling here or closing our position here. But it's most likely wrong because we don't know the waves of a higher degree, which means we are not able to confirm if our count here is really, really correct, which also means it takes a lot of time to work out the count before we can actually then make our trades. And it's much easier to say, okay, we don't bother to try even to work out a 5-minute time frame, but we try to work out what's going on the daily time frame, or maybe on the whatever 6-hour chart, 4-hour chart or so. Which in turn, however, also means that if, I don't know, like, so let's clear everything that we have on the chart here. If I would say this here is 1, 2, and I now would expect that this becomes wave 3, obviously would have already been proven wrong by that pattern here, or not necessarily. But if I would assume that, then yeah, like, so I would assume we're now in wave 3 and I would have entered somewhere here. Well, until we get up there, we have a lot of time to cover. So we would have really a lot of time to cover until we reach that point, which means that in between, since I'm only able to enter roughly here, my position would look like gold, and suddenly my portfolio would be in the red, yeah, until we reach the point where actually then it moves in the right direction again, if my labeling is correct, yeah. And yeah, that brings us to the other point. So since I mentioned earlier that at any given time, there might be 2 or 3 ways how, or more even, how you're able to label the chart, and all of them might be valid. Where it then comes down to, there are certain rules. So Elliott Wave Theory has very specific rules as to wave 1, how it has to be structured, wave 2 and so on, and how a zigzag and whatever they are called has to be structured. And then each of those has additional guidelines, yeah, where basically you follow, or what's the most likely, or your primary charting would be that whatever fulfills all the rules. So it's generally valid labeling, and then most of the guidelines also apply. So that would be the requirement to say, okay, that's the one I think is most likely to happen. And then your second labeling also should fulfill all the rules. Otherwise, it's invalid by definition, but has maybe whatever, like 1 or 2 guidelines less that it matches, and therefore it's less likely to actually apply. Yeah? And yeah, so I think with that, we've covered the basics of Elliott Wave Theory in like half an hour, which is actually not that bad. And I can refer back to that stream for everyone that kind of like wants to get the beginnings right. As mentioned, you can play around on TradingView, but without actually understanding the rules, it's going to be a real pain in the ass. If you still have your doubts about Elliott Wave Theory, follow the link in the description down below. Create your free account on Elliott Wave International and read the free book, and maybe start with the chapter with the actual real life results that the authors had when it comes to the crisis in, or crash in 87 or whatever they predicted there. Yeah, it's been a couple of years since I read the book, so might have to reread that part again. And alternatively, create your WaveBasis account, wavebasis.com. You can start a free trial where you can also have auto label features and stuff like that. Because as we saw, if we label something here, I don't need a new one, but if we label something here, we have the benefit, or you have the benefit, that it will actually tell you or project to you the most likely areas. Now, those are not always correct and so on. So it's not that this is like the golden grail of Elliott Wave Theory, but it's really a nice tool to double check or get some alternative data, so, or just compare it with your data or whatever you want to do, and to practice labeling Elliott Wave Theory. However, the software that I'm using, although on this computer I've just set it up freshly, so not everything is fully set up yet. And yeah, I already have my license, so don't need a discount, is called Motive Wave, which is a little bit on the pricier end. So their Elliott Wave features start at $89 per month. And it looks a little bit crappier. So Wave Basis definitely looks nicer, and even TradingView looks nicer. And outside of the software, it requires a separate dedicated data feed subscription. So that they don't offer. So like in my case, I, for example, have an account with Interactive Brokers, which you can also find a link down in the description below. And they pay roughly $30 or €30 per month for data feeds. So just to get the data that you can see blinking here. Yeah. Now, what Motive Wave has, and what's really nice, so they don't have automatic forecasts, yeah, but you also have your labeling stuff. But what you have is like automatic warnings. So if I'm violating a rule, like here, for example, wave 4 terminates before the end of wave 3, yeah, then it tells me, hey, this is simply wrong. You cannot do that. They also have auto labeling features. So I could, let's open up, I don't know, let's pick Apple. Always takes a moment to fetch the data from Interactive Broker. Okay, and there we have some stupid average on the chart that nobody needs. And let's switch to monthly, which again takes a moment. Yeah. So while this here is loading, so Motive Wave, you can basically set up multiple data sources. So you can use Google as a data source, which is not super reliable and doesn't provide you with real-time data. And you can use a service called Bar Chart, which is only for chart subscriptions and nothing else. Actually going to move the camera here for now, since that area usually is not used. And or you can have an Interactive Broker portfolio and then basically install the Interactive Broker, what's it called? Trading desk or something, and they are basically then use that as your data source. Now, technically, it should eventually show me the monthly chart, so it's really slow right now. Blah, blah, blah. Don't see any errors on the other end, so, but yeah, we'll just give it a moment. Which is, once you've downloaded the data, so once it's in your system and so it's stored, so it doesn't take every time that long. So if I switch back to Amazon here, it actually goes in the blink of an eye, where we are right now on the weekly chart. And if we go to Apple, well, right now it's still gonna load, yeah. So maybe shouldn't have done that, because it just might start from the beginning again. And yeah, so yeah, I have to wait for that. But yeah, so here we have Apple. Then you can switch between, so there are time frames. Then here we have logarithmic and regular view, however you call that. Which is also one of the, not challenges with Elliott Wave Theory, but basically you can apply it on the logarithmic chart, but you can also apply it on the, I don't know what it's called when you're not looking at logarithmic, yeah. However, the thing is, you have to look like what, you have to get a feeling what looks best in quotes, so what fits best. And there's also the idea behind, if you have huge price movements, so from cents, I mean, since we're talking about multiple stock splits over the years to the current price in the 100s, then logarithmic is most likely going to be the right choice. Yeah. Now, that's right now not auto scaling, so but yeah, so then the first step to label it would be to find a low point, and you would need to actually have the, you don't necessarily have to have the lowest low point, which here would be 0.93, and here it would be higher probably. Can I get low 0.45? Yeah, so technically we could say it started here, which would then be 1, 2, doesn't check out as 3, 4, 5, or when, if it plays out as a leading diagonal, it would work out. So again, we start on a high time frame. Why do we start on a high time frame? Because we have to work out what's the biggest count, and then we can confirm it on smaller levels, which again takes a lot of time. Now, as you see, Motive Wave has a ton of tools. So we could say here, we can try auto wave, for example, and simply select this as start point and say, label me this. And it actually would somehow say, okay, this is a corrective pattern ABC, which definitely doesn't make sense. Then we can say, label me this as an impulse wave. And it will say, okay, that's 1, 2, which might check out. And what's nice with motive wave, we can right click and we can say decompose one level, and it basically does it, just not for the first wave. Yeah, so which obviously is the annoying part, which means we would have to manually confirm that this here is actually a leading diagonal, because it will not check out as a impulse wave. Not sure if we can auto label that part. Nope, unable to fit the wave in the range. Now that could be because the wave is not, the pattern is not there, it doesn't fit, but it could also be because on this time frame we're not able to see it. So if we were to look at a lower time frame, we're suddenly able to confirm it. Yeah, and I'm not gonna check that right now, or are we? So here we have 0.93, here we have 0.45, so technically that checks out as wave 1 and 2. And then here, technically, if I say tools, Elliott Wave leading diagonal, then technically I could label this as, what do we have here? So yeah, I'm gonna label it, so then we get to see if there's an error or not. So technically that could, yeah, okay, that one is 0.46 or so, 0.51. Okay, it doesn't check out because this point here is lower, which violates the rules. Yeah. Now, again, we have to keep in mind that Elliott Wave Theory is based on mass psychology, and that therefore in individual stocks it will not always as accurately apply, which means that while we will not get a correct labeling here, it could theoretically, yeah, it could not be correct, but it could still be theoretically like, yeah, like something you can work with. Yeah. However, in those cases, it's not always about labeling from the beginning, because we can also just get rid of everything here, and we can basically start from the recent low that we had down here. Yeah, so in 2003, it's a long enough time frame, and we could work with that. However, we're not going to waste our time with Apple, because we're going to basically, here we have NASDAQ. As I said, I have the software not fully set up here, so we're going to add a new watch list, and we say indices, since they already exist, and open, and move that here, and here we have the SPX, and go with that, and we are on the monthly chart, and it goes here back. So that's also a thing, like something that I still have to get sorted out. As you can see, if we circle back to the wave basis, so if we circle back here and we jump on the monthly chart, we can clearly see that we have data back till 1872. Whereas on here, we right now only have data from 2006, which is a big issue if we want to find out the wave of the highest degree. So if we want to label from really the biggest data that we have downwards to figure out where we are, because again, our data starts in 2002 or so, like 2004, 2002, 2004. Yeah. Whereas, which means we basically are starting 2004, we are starting from somewhere here or here. Let's check, okay, before the drop here. So we're starting from somewhere here, and we're missing out all that prior information. Yeah. And that prior information more or less tracks out to be wave 1. So which is something that I'm just gonna say now as trust me, bro, since we right now with the current data sources cannot confirm it. Which means if we were to label that down, it would actually be 1 either here, 2, or here, most likely here, so that is like some combination, so like a double corrective pattern, 3, 4, 5. Yeah, so something like that. Might be, again, there might be some variation in there, but that's how it's supposed to label out. Now, since we're starting here, it means our starting point here is actually an impulse wave. And when I can label it like this, which again might not check out, so so while I can label it like this, it actually would only be that 5th wave here. Yeah, that 5th wave, which means then here we are expecting a corrective pattern to follow, because if we take that further, yeah, that 2 is not yet correct. Yeah, but let's go back here. Yeah, it still says here. Okay, then we have ratios. Yeah, so Okay. So that would be more likely. Actually, let's and hide the ratios. So let's assume that this would actually be a correct labeling. So, hey, we already have the worst behind us from the corrections that happened the entire last year. And now we are basically on our way back up, which means this would be wave 3, which then subdivides into 1, 2, 3, 4, 5, and so on. Yeah. And in order to confirm that, we have to jump further down. Weekly might not be enough. So, but we can say here, first of all, yeah, they align well. That point was here. That point was here, and that point is also here. And now we can say decompose one level, and it doesn't do anything. Did it do anything prior? Okay, it just throws stuff somewhere. That doesn't help us. And so basically, we would need to confirm this wave here if it's already finished. And if we, again, switching here to the desk cam. So again, you can find the cheat sheet in the description down below. Maybe, you know, like download it, print it out, and then you can just follow along more easily. So because we know that the first wave, or our first impulse wave in quotes, ended. And again, if we circle back, so again, screen share, I need to configure my Stream Deck. Yeah, so wait, what? There. So while we are only looking at this part here right now in motive wave, there's actually so much more history, and we know that right now we would expect a corrective wave. And that, if I recall it correctly, again, I also have to consult the book on occasion. I'm by far not a master of Elliott Wave Theory yet, yeah. Then the corrective pattern should turn around or go till roughly wave 4 of the impulse wave or previous impulse wave of a lower degree, which means we would actually expect, based on 0, 1, that our corrective pattern down here will get down to roughly that point here, which means we would still have a lot of drop to go. And it would be similar if we take just a regular line. If we compare this with the Great Depression, then you can see that we're in a similar area here. That, I mean, it could also, like, again, as far as I recall, it was the area from wave 4, not exactly the terminus of wave 4, yeah. But if we take line for, where do we have, yeah, COVID crash was relatively small in comparison. So if we zoom in here, that would just be the COVID crash. And yeah, sorry, and move that aside, then we still would have some way to go. So we're still far above that. If we would consider it like the crash of the housing market, we would have also more to go. So, but yeah, like based on Elliott Wave Theory, we still have a lot more to go. And we have to consider that right now we are only looking at this part here, which is 1, 2, 3, 4, 5, which means we would expect, which brings us back here, which means we would expect that, and again, zooming out here, so we are only looking at that small part, 1, 2, 3, 4, 5. And if we say, again, we can confirm the smaller levels, but if wave 3 and 4 are here, then we would still expect the correction to go into that area. Now, we already have been roughly in that area or almost touched it, but we haven't been there yet. But the bigger point is, independent of this part here being here or here, yeah, doesn't make a huge difference right now. The bigger part is that we have to be able to confirm this. And so this wave 2 has to subdivide into any corrective pattern, but not a triangle, which means it would have to, that should be that one. No, that's channel. Let's check what's the shortcut for correction. K, okay. So that part here has to subdivide into a proper correction. Now it does that here, but that doesn't mean that it's, or that doesn't guarantee that it's valid, because again, the corrective pattern itself has then to subdivide again, yeah. So it's also possible, so if I take the labeling of an impulse wave, so I'll stop for a second. So you can see that I can also label this 1, 2, 3, 4, 5, which in this case would be a leading, or in that case it's labeled as an ending diagonal, okay? And which would mean it's not a corrective pattern, which would actually mean this couldn't, yeah, wave 5 shouldn't move. But that cannot, let's see if we can label that as an the leading diagonal, because if it's the beginning of a corrective pattern, so wave A, yeah, so then, okay, it would also be valid as a leading diagonal. There are no rule violations, which then, however, would mean, so if we label this as a corrective pattern, that this is basically wave A. We're still looking at wave B, and wave C is then basically where that wave 2 is going to meet. And just gonna, yeah, so there, an interesting thing, actually, can I show my toolbar? Study, no, view components, that's what I need, yeah? So if we take a vertical line, if it were a regular old-fashioned, or not vertical, we need a flexible line, trend line, there we go. So if it were a regular old-fashioned ABC zigzag, then very often, again, not always, but very often, the wave C would be pretty much identical in terms of price movement to wave A. So based on that, and that would be assuming that this is wave B already, we could actually expect that wave C will take us down here, and meaning that we still have a lot to go. I mean, there we're talking about a 25% drop in the SPX that's supposed to come. But for that to be true, we also would have to be able to confirm that, because in an ABC, again, if we quickly circle to the cheat sheet mentioned here, so in a zigzag, wave B would be any corrective pattern. And if we look at the percentages, I'm actually going to roll over there for a second, then wave P would be either in 30% of cases a zigzag, in 40% of cases a flat. And if we look at that, flat and zigzag, they are both labeled the same way. So it's both ABC. It's just about, if we look at the visual illustration, you see that in a zigzag, wave B doesn't recover as much as in a flat, whereas wave C then goes further down. And also we can see there are some rules in terms of the height and length of each wave, or the relations between the wave sizes as to which it is. But it both is possible, which means if we again label a corrective pattern, then we can see here that a potential valid labeling would be this here, ABC, which would bring our wave B up here, blah, 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 show origin, okay, whatever, don't need that, and which then would bring our wave C. It's going to be hard to pinpoint whether we have that 703.86. So wait, what? No, 4,512.72. 4,500. Yeah, close enough. So which would mean that our correction would actually then end here. And if we zoom out somewhere, there has to be that point C flying around. Okay, so it's still tight here. Unlock, lock in. Yeah. So that's pretty much how things could play out. And I'm going to add 2 trend lines here real quick to highlight that. So we would have the one going here and here. And then we would have the one going here and here, which means right now that would be bad for my portfolio. So I'll have to check that again, because it would indicate that we still have a lot of room to go before we finally continue with the correction, which would mean that my portfolio would be set up right now to lose a lot more money before we cover all that money. Yeah, and so like that's also one of the reasons. If we look here, so January, yeah, like how do I switch back to the regular cursor? Crosshair, there was something in the settings are not like, so preferences, chart, default tool, zoom, select, yeah, select default tool, apply, and then, yeah, how do I, okay, there are the tools, yeah, so select tool, okay, and also doesn't help me. Where do we see what we have? Okay, here, so November, blah, 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 blah. So there we have the end of the year, and there we have the new year. Yeah, so which is basically here the reason why. Oh, I'm sorry. Yeah, thank you very much for pointing it out, sweetie. Yeah. So yeah, like now we hatched the wrong screen share for a second, but okay, to recap that part real quick. So basically we have the wave 2 prediction here, and we can subdivide that wave A, so wave A, into 1, 2, 3, 4, 5 as a leading diagonal, which means we would currently be in wave B, which has to subdivide with a 30% chance into a zigzag or 40% chance into a flat, which again are both labeled ABC. So, and which leaves us with like a 30% chance of other corrective patterns that might drag out longer or whatnot, yeah, but which would indicate that basically we have A, B, C right now. Now we can look on lower time frames to try to confirm that, which I will probably do in the end of the stream or after the stream, and then share the result in the next stream or something like that, because I don't want to have this turn into a super endless long stream thing. And anyway, so if that turns out to be true, it would mean that I have to adjust our portfolio, because right now we are still betting against the markets, whereas this would point that we are still having a couple months ahead of markets recovering pretty much till, what do we have here? That would actually be almost till July, which would mean a couple of losing months ahead before we actually then resume the downwards journey to that point, wave 2, which is something actually homework for me in that case to look into that. Now, yeah, like we actually been streaming an hour, if I'm not mistaken. I'm gonna check real quick if I see it. Oh yeah, I see it. Yeah, so we're pretty much on an hour, and I guess that's why I want to keep the stream for now. Today's stream obviously was a lot of introduction. As you see, not all of my setup is yet super worked out in terms of like seemingly switching between devices, and yeah, my Motive Wave software on this computer is not fully configured yet in terms of data sources and historical data and so on. But I'm gonna do my best to make the streams. Yeah, I don't promise daily, but I'm gonna do my best to make them like multiple times per week to basically provide a little bit more insight into how I'm managing the portfolio, which also is a nice benefit for me. So, because as mentioned earlier, I'm not doing the stream for donations or something like that, but it's simply about to also force myself to more actively manage the portfolio. So, because many of the losing months, despite my relatively outstanding performance over the last 4 years actually in May, yeah, like many of the losing months could have been avoided if I would have dedicated more time. Now, again, my performance was still great and I'm not complaining about it. But so I'm seeing a way here for me to use the streams to basically share what I'm doing, why I'm doing, how it works. Hopefully one or two other people that get interested in Elliott Wave Theory might join the streams from time to time and maybe correct me when I'm wrong somewhere. Yeah, like, I mean, I'm also not getting everything right. And yeah, so serves multiple purposes. One of them is obviously selfish, to basically, or multiple of them are selfish. So grow that YouTube channel, spend more time on actively managing my own portfolio. But as a result, that also helps everyone that copies my portfolio, which currently I think are 80 people or so, with like a little bit more, around $100,000 in copy volume. Yeah, because it also means more return for them. Anyway, so quickly gonna check out the chat messages and let's see if that works. So yep, Merck says, respect that you're building content for this niche legend. Don't need to read this out. It's fine. Yeah. Timeline of how long you'll be on. I'd appreciate it. Yeah, I'm going to try to keep this for 1 hour per day. So I still have actually 2 other streams almost every day that are in different areas. And then there is Sea of Power scripts. And then there are my YouTube channels. And yeah, so the day is otherwise too short. Trying to spend 200,000 tomorrow. So it would mean a lot if you could help me fix the script afterwards. Yeah, I mean, if nobody has answered yet, I mean, yeah, it's not just me alone doing those things, but if you haven't had an answer yet, it's probably, I'm going to probably look at it in the next half hour. And yeah, so cool. So yeah, thank you for tuning in. I pity that nobody else joined in. I guess I would have to put a little bit more effort in announcing it in advance on my eToro profile, since they are I don't know how many followers there, but yeah, so yeah, that's it. So I'm going to stop the stream here. Thanks for tuning in. Check out my eToro portfolio, or make sure to like, subscribe, and enable notifications so you get notifications when I go live here. And see you then next time with another stream.